In December, YieldMax released two brand new ETFs, and these ETFs are pretty much similar when it comes to strategy. They have a similarity and a little bit of difference. So I thought I'd make a video to compare between these two ETFs and see which one you should go with. The first thing I'm going to look is income projection. So let's say you invested $50,000 in one of the ETF, you're going to get monthly income of $1,766 or annual income of $21,198. with the $50,000, but at the same time, using the same amount of money, which is $50,000, you're going to get $2,361 or annual income of $28,327. So that's a difference of almost $6,000 a year. Now, that can just be the main reason why you should pick one versus the other. I'm going to give you a bunch of metrics here to know exactly which ETF is going to be perfect for you. These two ETFs are FIVY and FEAT. So FIVY is YieldMax Dorsey Wright Hybrid 5 Income ETF. FEAT is YieldMax Dorsey Wright Featured 5 Income ETF. I'm going to read the difference between these two ETFs momentarily. But if we look at the distributions with the FIVY, by the way, FIVY is on your left-hand side and FEAT is on your right-hand side. The current yield right now is 45.55. And this is just based off the distribution they just paid last week. Now, we look at the distribution yield for FEAT is 60%. So right here, we can see FEAT has advantage when it comes to distribution yield. The yield itself can be the main reason why you should pick this versus this one. In the end, I'm going to give you a chart, which is going to be pretty cool. It's a table that has all the points, and I'm going to give you a point on each one of them, and that will give you a good judgment of which one you should pick. Now, if we go down to the distribution that they paid, this one paid about $1.67, and this was the first distribution that they paid on January 24, 2025. This one here, FIVY, FEAT, paid $2.19, and the payment date was the same, January 24. We go down to fund overview. This is very important to know this difference between these two ETF. I'm going to read here for a bit. The YieldMax Dorsey Wright Hybrid 5 Income ETF FIVY seeks to track the performance of the Nasdaq Dorsey Wright Tactical Hybrid Option Income Strategy Index. The index selected for inclusion the 5 YieldMax ETFs that corresponds to the 5 underlying securities that ranks highest according to Dorsey Wright's proprietary momentum rating methodology. In addition, the index also selects for inclusion the 5 highest ranked securities. There are usually a total of 10 components in the index, and at each month rebalance, each YieldMax ETF receives 12% weight, and each underlying security receives an 8% weight. The result is a hybrid index of 60% 40. So in short, what they're going to do, they're going to pick 5 YieldMax ETFs and 5 stocks. These stocks will be pretty much the same stocks that they're underlying stocks for these ETFs that they pick. And I'm going to show you down which ETFs they picked for FIVY. So what they're going to do here, they're going to do 12% on each ETF. That's going to give a 60%, and they're going to do 8% on each stock, and that's going to give you 40%. So it's pretty much a 60-40, but not 60-40 like a bond. This is going to be 60-40 ETF versus actual stock. So 60% will be leveraged because this is going to be synthetically ETFs, and these are 40%. They'll be actual stock, and they are going to hold those stock directly. Fund overview for FEAT. The YieldMax Dorsey Wright Featured 5 Income ETF FEAT seeks to track the performance of the Nasdaq Dorsey Wright Tactical Option Income Strategy Index. The index selected for inclusion the 5 YieldMax ETF that corresponding to the 5 underlying security that rank the highest according to Dorsey Wright's proprietary momentum rating methodology. There are usually 5 components in the index, and at each monthly rebalanced, each component is equal weighted. So for this ETF here, they're going to just have 5 YieldMax ETFs, and those ETFs will be equal weighted. So pretty much each one would have 20%. There's nothing complex about this one. So when it comes to diversification, right off the bat, we can see this one has more because it has 10. Investment objective for both of them, of course, will be the fund seeks to track the performance of the security that they're seeking, and the second objective will be to generate income. Fund information, this is FIVY and this is FEAT. Fund inception, they are both incepted on the December 16th, 2024. So it's been about a more than a month since they came out. This one is traded on the Nasdaq Stock Exchange, and this one also on the Nasdaq Stock Exchange. They both track the same index pretty much. The difference is on management expense ratio, which is MER. Gross expense ratio, you only pay 0.88. This one is 1.28, so this is more expensive than this one. Again, on this channel, I always make comparison between the two ETFs, or also I give you a guidance on income of these ETFs. So pretty much I give you an update very frequently. So in order for you not to miss those type of updates, make sure you subscribe to this channel. And if you like my content, make sure you smash the like button and also share with someone who you think this video might help. Let's look at fund data and pricing. So net asset right now, FIVY has 9.58 million. A net asset for FEAT has 11.72 million. So more people have invested in FEAT versus FIVY. That's by almost 2 million. NAV, this is 47.90, and NAV on this one is 46.87. When it comes to closing price, this closed at 47.89, this closed at 46.78. Remember, this one came about $50, and this one came about almost about 50, but not actually 50. It was about 49-ish. That means they are both a little bit lower as compared to the price they started with. And that's going to give us performance. Performance for FIVY right now is -10. And this one is -9.6. FEAT has performed better. Finally, let's look at the top 10 holdings for these two ETFs. First things to know, this one has 10 securities, in which 5 are actual stocks and 10 from YieldMax ETFs. This one has purely just 5 ETFs from YieldMax. So the first one here, it has Meta ETF from YieldMax, has Netflix, has Coinbase, which is Connie, has MSTR, which is MSTY, and has Tesla, which is YieldMax Tesla Option Income ETF. Now, look at the underlying stock. They have Coinbase stock, they have Meta, they have a MicroStrategy, they have Netflix, they have Tesla. So it's pretty much underlying stock of these ETFs from YieldMax. So the difference here is that, again, these are actual stocks that they are investing in. And of course, these are synthetic cover call ETFs. FEAT has Meta, has Netflix, has Coinbase, which is Connie, has MSTR, which is MSTY, and has YieldMax Tesla Option Income Strategy ETF, which is Tesla. And they have one more thing here, is this is a bond, right? Because some of the money that they have, because most of these ETFs are synthetically invested, so they would have to have that as a collateral. Versus here, they can just have the amount of money that they have. Instead of collateral, they have some of these ETF as actual securities. That's the main difference between these two when it comes to holdings. And both ETFs, you can buy them Charlie Schwab, E-Trade, Interactive Broker, SoFi, Ameritrade, Webull, Robinhood, Fidelity, Sogo Trade. And for people who live in Canada, you can buy these ETFs from any, brokerage house, Questrade, Wealthsimple, RBC, TD Bank. You can buy these ETF from those, brokerage houses as well. Now, let me take you to a final chapter. This is going to be a chart that I made, which is going to show point by point on differences between these two ETFs. The final thing on our epic battle is going to be on a scorecard that we have here. On this scorecard, I have 6 categories that I'm going to judge these two ETFs on. And the first one is going to be on geography, risk, and strategy. And on this column, we have FIVY, and this column we have FEAT, this column we have a score. Each one would have 2 points, and whoever wins on that category is going to have 2 points. If they're all the same, then it's going to be a draw, which is going to be 1 point on each. Now, geography, we know geography, risk, and strategy, they all use synthetic. But the difference here, FIVY has 5 underlying stock, invest directly. So FIVY here in this category is going to be a winner and is getting 2 points on that. So the second category here is going to be on fees. As I've shown you from YieldMax website that FIVY, it's only 0.88 and FEAT is 1.28. So when it comes to fees, FIVY is less expensive whenever it comes to your investment. So you're paying less to invest in FIVY and you're paying a little bit more investing in FEAT. In this category, then FIVY wins, gets 2 points on that. Third category is going to be on diversification. FIVY has 5 ETFs and has 5 stocks. And I've shown you, of course, this is a 60% and this is 40%. FEAT has only 5 ETFs and they're all from YieldMax ETFs. So, of course, FIVY, because has those 5 underlying stock invested directly, then is going to be a winner on this category. It's going to get 2 points. So far, FIVY has gotten 6 points because it's 2 points on each category. The fourth category is going to be on performance. As performances of today, FIVY has returned negative 10.34. FEAT has returned 9.62. So FEAT is going to be a winner because FEAT has lost less money than FIVY so far within a month and a few days. The fifth category is going to be on yield and distribution. FIVY, so far, the yield that it has right now is 42.40. And this is based on the average or the distribution they just paid. And FEAT is going to be 56.65. So, of course, when it comes to distribution and yield, because this has paid more and also has higher yield, so FEAT is going to be a winner right here. And I can see that for the foreseeable future that FEAT is going to have more. And that's because it's 100% invested on those, high risk ETFs. This one has invested on only 5 high yield ETFs and has 5, which is a 40%. So that would have a drag at all time. So when it comes to the yield and distribution, I can see this going forward. FEAT is going to be a winner here for a long time. The last category I'm going to score these 2 ETFs on is going to be on average income. So 50,000 I've shown you earlier. So if you invested $50,000, this is just an example of 50,000. I mean, if you can put 100,000, you can put 10,000, you can put, $500, will be pretty much the same. So whenever money you're investing right now, FIVY versus FEAT. So with that amount of money, 50K, you're going to get only 1,766 a month. And this one, you're going to get 2,361. So for income, because most investors are investing in these ETFs for a little bit of growth, but mainly is for income. So FEAT wins right off the bat. It's going to give you more. If we scroll down here, we can see FEAT has gotten 6 points out of 12. FIVY has get 6 out of 12. And the winner is a draw because both of them get 6 out of 12. Now, conclusion, diversification versus performance and the income, as I've shown you on that chart. For purely diversification, FIVY, of course, wins because that's more diversified. So if you are investing just for diversification, you think diversification is your main category for picking either of these ETF, then FIVY just wins right off the bat. It's more diversified when it comes to the underlying security it has versus FEAT. And performance and income, if your main thing is performance and income, then of course FEAT wins because we've seen FEAT has more income and also has performed well. And going forward, I would see FEAT would have more income for the foreseeable future because of that higher yield and higher volatility. But when it comes to performance, in the future, it might not perform as well if the market tanks. Okay, the second conclusion here is other YieldMax funds. So if you don't like either of these ETFs, what you can do is to pick other YieldMax funds. And if you want those monthly income ETFs, I think the one I really, really like is ymax. Is one of the best funds. And of course, more new fund just came out. I make a video about those ETFs. So just check the link below. You're going to know what also those ETF has in store for you, and if it's going to be a good fund for you to invest your money. So guys, that's all I have for today. Again, I just want to remind you, don't forget to subscribe so you can get this type of update and this type of comparison between two ETFs. If you like this content, please like and also share with someone this video might help. Thank you very much for watching. Till we meet again next video. Bye bye.